Let's take a look at the uranium sector. There was some action in some uranium miners last week that was suggestive of a potential stage 2 breakout across the sector. And this sector's been on my watch list for a while now because of the depth of the stage 4 bear market that it's been in for multiple years. This chart shows the historical price of uranium, and you can see the bull market that uranium underwent from the mid 2000s all the way until 2007, where the price of uranium went up about 13-fold from $10 all the way to over $130 a pound. And then after that parabolic spike, uranium fell into a bear market and has basically shed about 85% of its value and gone all the way to about $18 a pound as we speak. And uranium did have a mini bull market in 2010 that we'll touch on a little bit in this video, where the price went from about $40 a pound all the way to about $70 a pound, so almost 100% gain in a short period of time. And the biggest miner in this sector is Cameco, and similar to the price of uranium, this stock had a major bull market in the mid 2000s until 2007, where it went up about tenfold, and then suffered a major bear market. But just like the price of uranium had a short-lived bull market in 2010, where it broke out and went up almost 100%, but then suffered another stage 4 decline, and this was kind of punctuated by the Fukushima disaster, which you see the big gap in the price here that was never filled on, obviously enormous volume, suggesting a breakaway gap lower. And Cameco, after going into that stage 4 bear market, had a sideways grind for a couple years and then has been in another stage 4 bear market for the last couple years. And again, it's lost, 80-85% of its value from the bull market highs in 2007. Now, the uranium mining ETF URA was introduced in late 2010, which is kind of ironic because it was towards the end of that mini bull market. But it's amazing how many of these specialty ETFs get released towards the end of bull markets for their particular sectors. But anyway, the Fukushima disaster obviously was not something that could be foreseen, and after that occurred, you can see the gap down on this chart again on big volume, and ever since that, URA has essentially been in a stage 4 bear market. There has been a number of fake rallies over the years that have probably suckered in bulls into the sector, but they've obviously failed. And actually, 2014 was a good example of a fake breakout where a number of the uranium stocks started to rally on big volume, but the rally failed and they went back into stage 4 bear markets. And what I really have paid particular attention to this year in uranium is the stage 1 base that seems to be forming over the past year, which you can see here, and we'll highlight further in this next chart, this showing the last couple of years in URA. And basically, again, we're starting to see a stage 1 base here. And what really caught my attention in the uranium miners last week was the big volume for the week. URA did about 1.4 million shares, and the average weekly volume is only about 500,000 shares. So 3 times average volume is a good amount of volume for a stage 2 breakout. And we see that URA is trying to pierce the 30-week moving average to the upside and potentially form a stage 2 breakout. Now, looking at URG, which is a smaller cap uranium miner in the sector, this shows like the potential for even that mini bull market in uranium that occurred in 2010. You can see what happened to a uranium stock in that sector. I mean, it went up about 4 times in just a 3-month period from October 2010 till the end of the year. So the potential for huge gains in this sector is pretty, massive, given the small size of the sector, which is why it's so attractive from a stage analysis perspective, because of what can happen once these stage two bull markets start to break out. So looking at the uranium sector on the stage analysis screener, we can see that only one of the uranium stocks in this list is in stage two, but we have Cameco and UEC in stage one, and some of the uranium stocks, like I showed with Cameco and a couple of the other ones, Denison, UR Energy, are doing above average volume right now over the last week or so. So that's again suggestive that we could be headed for a stage two breakout. Now looking at Cameco on a weekly perspective, Cameco's actually had a pretty massive rally over the last 2 months, going from about $8 a share to almost $11, so about a 40% gain. And the volume on Cameco has actually been very constructive, doing 20 million shares 2 weeks in a row, where the average volume's about 10 million shares, and then it did 15 million shares last week. So you're seeing increased buying pressure in Cameco, and again, it's gone above the 30-week moving average once again. You can see all the fake rallies that occurred back in the bear market that didn't form into stage two advances, but the volume has been better on this rally than any of the previous rallies over the last couple of years. And looking at another uranium stock, Denison, some of these smaller cap uranium stocks actually have a better basing formation, which again is what you want to see at the end of a stage four bear market, is the stage one base, where the stage one base basically signifies that disinterest in the sector and just basically people giving up, but buyers and sellers have gone into equilibrium, and the bears really can't push the market any lower, which is why the stage two breakouts occur after this stage, because once enough buying pressure comes in, that's all it takes to push the market back higher into a stage two advance. So you can see that in Denison, we did almost 4 million shares last week, where the average volume is about 2 million shares. So starting to look pretty favorable on the volume starting with last week. And if we can get some more volume in this stock and some of the other uranium mining stocks, it really would potentially signify that this is a real deal stage two breakout. Another uranium mining stock, UEC, which, full disclosure, I purchased shares of this stock last week as of trying to get in early on a potential stage two breakout. But again, this stock did about 6 million shares last week, and the average volume is almost 4 million shares. So what we want to see in these uranium mining stocks is more volume over the next 2 weeks and further price appreciation, which again would signify a real stage two advance taking shape in this sector. And one more uranium stock, URG. Again, this stock did over 2 times average volume last week, and once again, like the other uranium mining stocks, is breaking it out above the 30-week moving average. And again, the previous pattern that it's been in over the last year is one of the stage one base. So it's definitely more constructive that these stocks have kind of completed their declining phase, and they're just looking for really an increasing or a stabilizing price of uranium to form the final part of the base that would allow them to actually move higher, and more buying pressure will come in once the market kind of gets more of a feeling that this bear market is finally over. So the bottom line for the uranium stocks is that they could be on the cusp of a stage two breakout. Like I've stated previously in this video, we're looking for more volume over the next 2 weeks, and obviously further price appreciation to the upside to kind of give the all clear signal that this is a potential stage 2 breakout and not just another fake rally that we see in stage 4 bear markets. And it also isn't out of the ordinary to see stage 2 breakouts occur this time of year. Obviously, in the gold mining sector this year, we saw the stage 2 breakout take shape in February and move higher for multiple months. And we've seen previously in uranium where, such as at the end of 2013, we saw a base take shape and then a breakout into a stage 2. But like I've stated, this stage 2 in 2014 failed and uranium moved back into a bear market. But this, we do have the advantage this time around that this stage 1 base that's occurred during 2016 has gone on for about a year now, which is a pretty significant period of time to base, and the price action is actually a lot tighter in this base than at any other time during this stage 4 bear market, which is again another constructive sign that the buying and selling pressure is in equilibrium, and all it is going to take is just a little bit more buying pressure to push this market back into a stage 2 bull market.